Hi all, welcome back to G2's weekly market update, where we break down how global markets moved and what drove investor sentiment across the US, Europe, Japan, and China. For the week ending May 1st, markets navigated a complex mix of central bank decisions, strong corporate earnings, currency volatility, and continued uncertainty around the Middle East conflict and energy prices. Let us take a closer look at how each region performed. United States. US equities posted solid gains despite a hawkish Federal Reserve meeting and ongoing geopolitical tensions. Large cap outperformed small caps and value stocks led growth as rising oil prices boosted the energy sector. The S&P 500 delivered its best monthly return since November 2020, gaining over 10% in April. Earnings seasons played a key role with more than half of S&P 500 companies reporting better than expected results. Among major names, Alphabet surged on strong AI and cloud demand, while Meta platforms fell after announcing higher AI spending and a $25 billion bond issuance. The Federal Reserve kept rates unchanged, but an unusually high number of dissenting votes signaled a more hawkish tone. Treasury yields moved higher and investment grade bonds saw mild pressure amid heavy issuance. Europe. The Stocks Europe 600 ended the week largely flat as strong earnings momentum was offset by concerns over elevated oil prices and stalled Middle East negotiations. The European Central Bank held rates at 2% but acknowledged that risks to growth have intensified. Economic sentiment in the Eurozone fell to its lowest level since 2020, while German inflation edged up to 2.9% due to energy cost. In the UK, the Bank of England also kept rates on hold at 3.75%, citing uncertainty around energy prices and inflation. Japan. Japanese markets were mixed, with currency movements dominating sentiment. The yen staged a sharp rebound from near 160 levels, widely seen as official intervention to support the currency. The Bank of Japan held rates at 0.75% but delivered a hawkish hold with a split vote, signaling growing momentum toward further rate hikes. The Bank of Japan raised its inflation forecast sharply while cutting its growth outlook, reflecting the difficult trade off between rising energy driven inflation and slowing economic momentum. Japanese bond yields moved higher in response. China. Mainland markets remain stable in a holiday shortened week, supported by Moody's revising China's outlook to stable. The Politburo signaled continued targeted policy support without broad stimulus, emphasizing domestic demand, AI adoption, and industrial modernization. Industrial profits rose over 15% year over year in March, highlighting strength in high tech manufacturing, electronics, and equipment sectors, even as other industries face pressure from rising input costs. G2 takeaway. This week highlighted how markets are balancing strong corporate performance with rising geopolitical and energy risk. While central banks remain cautious and on hold, currency moves, oil prices, and policy signals are increasingly shaping investor positioning across regions. That is your G2's weekly market update. Thank you for watching. Do not forget to like, share, and subscribe for more weekly insights from G2. We'll see you next week.